All attendees are in listen-only mode.
Hey, good evening. Good evening. How you guys doing? All right, Reinhold, Manuel, welcome. Clive, George, buddy, how you doing? Haha. David, Carl, Phil, hope you're doing, bud. Aaron, Dan, all right, Victor, Vinesh, Steven, awesome. Okay, good. Glad you guys can see my screen and hear me. Let's get started. Disclaimer as usual, nothing presented in this webinar or video presentation vocally or visually is to be taken as trading advice. All content of the video presentation is for educational purposes only. You know trading involves risk, so always do discretionary funds when trading. And that's CFT 4.41. Okay, let's look at some harmonics that presented in London. Okay, so this one was not it, right? So I got my little whiteboard here. Okay, I have all my harmonics written, and there was only 3 of them. All right, so Euro Aussie. So we're looking for reasons to go short in Euro Aussie. 4-hour harmonic, 1-hour pattern. So we're looking for a 1-hour pattern. As a matter of fact, they gave us a 1 leg out of the band, 1 leg in the band. So your entry happens to be here, which I wouldn't take, but that's the day tracer. So you should be up about 8 pips right about now. Okay, advanced M. Okay, right on the day tracer, not a big fan of it. So I would have passed on that one. Okay, I'm looking for reason to go short in here. All right. The next one that was EN. Same thing, for our harmonic, we knew this quarter point was going to play a factor. It's a round number. Okay, so we're looking for a 1-hour pattern. Same thing. So over here, okay, it's like an advanced stem, right? So you got a out of the band, in the band. Notice price never closed below the 13 here. It did over here, below the market baseline, back above. This is what we call a baseline bounce. Notice the divergence from this high, right? This high area to here, and price went up. So what you're supposed to do is take a short right in there. Okay, that's your move. Now, if you don't want to take that short right in here, what's your next move? Okay, what's your next move? All right, Steven. ID, yeah, look at you guys. Wow, you guys are good. Right, the next move is an ID move, right? So you go into the 15-minute chart and you trade your ID move. You wait for the 1350 to cross, first pullback, right? RSI line signal line got a cross, okay, and you short it. RSI signal line cross over here, price close below the 13, and that's your move. Boom, easy, 40 pips. If you miss the anchor, look for your ID. Okay, I can't make it more simpler than that. All right, awesome, good. I'm glad you guys are listening, which is good. Next one is the GA. Okay, so Euro Pound is new. Okay, GA, classic, beautiful move. Okay, 1-hour pattern. Most of these look like advanced M's. This one doesn't really have it, right? This one didn't close below the signal line, back above, back below. They just kind of went sideways and dropped. This one is not your set. That's the pass. Okay, out of the band, in the band. Ideal situation, right? So this one is a 4-hour 50-50 bounce long. That's what I'm looking for. All right. I think that's about it in terms of what was going on in London today. This one is still dropping. Dollar CAD. Okay, so harmonic fired here, not here, here. All right. So yeah, I don't have out of the band, in the band. I don't have nothing. There's nothing that's not a set. Some of you will be like, well, first leg could be here because there's divergence. Okay, but I don't like it like that. Okay, so if this is my high, okay, if this is my first leg, or even over here, I'm looking for no more than 4 candles above this first leg, right? So I got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, and then the 12th candle drop. So yeah, there's too many candles in there. So this is not my first leg. Okay, yeah, this looks like a little half a bat, but you don't want to take this short with a 50-200 point pointing upwards. So that's a pass for me. It's okay because you know what? I'm coming off this peak formation. I'm gonna wait for it to bounce, and I'm gonna go along with it. Okay, so there's nothing there, and that's it. So tomorrow, CAD yen is the only one that's active, which is kind of cool because it's sitting right on the 200 EMA. So you're looking for it to come up like this. Okay, so you're looking for there's a quarter point, harmonic, and the 200 EMA. And some of you guys will call this a zone flip area, right? So they hit it from here and then from the bottom this way like that. This becomes the support. It's pretty good stuff. All right, so keep an eye on this one. Could happen in Asia, but you're looking for longs. Okay. All right. Yep, AFP coming up. Well, it's too far off. AFP is 50 pips. Anything more than 1 ADR is a safety. Okay. All right. Let's look at the 1 hour. Hey, Lisa. Okay. Well, you know, we had tons of red news today. Okay. Lots of red news. Service PMI. All right. Bank rates, monetary policy, Carney, unemployment claims, PMI, and then tonight, monetary statement in Aussie. So be careful with Aussie, especially with retail sales. All right. And then tomorrow, of course, nothing in London. You can get non-farm tomorrow. So if I were you, I would be careful because guess what? There were no clean setups in London this entire week. Very few, very, very few. Okay. Most of them happened in Asia. Most of the moves happened in Asia. It was kind of funny. Some people were asking me, how come you took those trades last night? You know, it was normally I would do a little bit of the DMR presentation sometimes on Wednesday, sometimes on Thursday, sometimes half Wednesday, half Thursday. Well, yesterday happened to be, I had nothing else going on, so I was working on the DMR presentation for tonight, yesterday. So I was looking at charts and I was just marking them and putting them together for the DMR presentation tonight. And I'm like, oh, look, they're all setting up. And they all set up perfectly. Okay, that's why I traded last night and I did not trade London. After the pre-market was over, I posted the videos and I went to sleep because I knew the market's going to hold high, the pounds, and then they're going to shift with the Carney news, with the red news. So they're going to hold it, and because there's non-farm tomorrow, they're holding euro at the high. They're going to move it tomorrow at non-farm. All right, the pound's already moved, so after a big drop, the market must chop. So they're going to chop the pound and they're going to move the euros tomorrow short. Okay, but they're going to use non-farm to move it. So the problem is you won't be able to take those trades. You won't be able to do anything with it. Okay, that's just, again, my point of view. Okay, all right. Sure enough, we were in level 3 today, peak formation high. We're looking for a reason to go short. They're holding the high. Okay, now, again, if you said, well, that's one leg, maybe it's going to come back up for a second leg. Okay, so the only trade you can trade at the peak is a W off the Mayo, long. All right, so let's see if there was a W off the Mayo long, because obviously the other trade we can take at the 12, 21, 22 off this high, which obviously didn't happen. The move we can take is a W off the Mayo, right? All right, so, okay, if it misses by 1 pip, it's valid. Okay, that's valid, 0.7, right? So your entry has to be here, going long, 20 pips. That's your W off the Mayo. This is nothing. Why? No visible stop hunt. Here's a visible stop hunt. It misses the 200 EMA by 1 pip. That means what? They widen the spread and they'll grab the pending sitting below it, right? Hit the stops. Okay? Second leg. Now, I would like a 1 leg out of the band, 1 leg in the band. That's the way I like it. Okay? Something like this, I'm not that thrilled about it. Okay? And I will not take this bounce trade, even though it's really nice for a nice 20 pip move. Okay? I won't take this bounce. Okay? It's the ARID combo. Induced breakout traders come back. 50% of the Asian box, as well as a first pullback of the 1350 cross, right? That's an ARID combo, but I won't take it because the peak formation high, and that's the continuation trade setup, and I can't trade continuation at a peak formation high. I'm looking for reversals, right? So that's why I can take the WF the Mayo, because WF the Mayo is an anchor move coming back to the high, but I don't know if the continuation will work. Okay. All right, next one. EJ. Now EJ, we were in level 3. We were expecting price to drop. We were right around here. We were like, man, that thing's going to drop. I think we even called it 3 hits to the high or something like that. Okay, so that's what I mean. Here's an M. Here's an ID move. Okay. So here's your M anchor formation. Okay. And we were right around here in the pre-market. We're like, man, that thing's going to drop. Okay. If you did take it and just hold it, okay, you got a 19, depending on your spread, you may, let's see, let me drop the correct fib for the 1/3 pullback. Okay, so the 1/3 pullback is here. From here to here is more than 20 pips, right? Your spread on euro should be no more than 0.5. If you got a 3 pip spread on euro for EJ, your spread is too high. Okay, so that's your move, your first move, right? Now, you hit your take profit. This would be considered a 50-50-50, right? Induced breakout traders come back, hit the 50, rolls over, closes below, short, right? The distance from here to here cannot be more than 1.5 points. So if you measure from here to here, it's 2.11, so that does not qualify. It is a nice trade, but that doesn't qualify, so you just let it go. Okay, it dropped 30 pips on that, 29 pips. All right, and I'll tell you why. Because sometimes when they don't really work, they're very far from the 50 line. The 50 line, or we call the static line, is actually the water. Okay, so when price hits the water, like over here, for example, right, they hit the 50, like over here, they hit the static. Okay, same thing. When they hit the 50 here, they hit the static, right? So every time they touch the 50, they should touch the static. Obviously, there's two types, right? One is the bounce, where it can miss it by 1.5 points max on the 15 minutes, right? Or a trap. This is called a static trap. It's called a static bounce. They can only do two, either a bounce or a trap. That's it. Okay? So the closer it is to the water, the closer the RSI line is going to be to the static. Okay? In this example, there's only one pin. Okay? When they throw one pin, it's usually further out because they just boop and then they pull it away. So it didn't give the RSI line enough time to go and swing around correctly. Okay? But again, once you know the directional bias, then you know what you're looking for. Hey, I just came off an anchor at level 3. In level 3, I can take the ID move. Okay? EC, same thing. I'm coming off this peak formation high. Let's take a look. All right, so I'm looking for a reason to go short. Here's my blue tracer. So if you're thinking, hey, I'm going to go short, all right, somewhere in here, okay, and it traps, this is called a trap, it traps back, done, right? You know this is not one of my favorite areas to trade. Why? Because of this kind of nonsense. All right, they look like they're going to go short, they come back high, they look like they're going to go short with this beautiful shift candle. So what do you do in that case is proper trade management. You take this, you drop the fib, you're like, okay, you know what, I'm going to put a foot soldier right here, and then if it comes back in 1/3, I'm going to get my position in, right? So you take the trade, it closes, this is called a trap. That means they've got to close back above the water. The minute it close back above the water, I'm going to kill my foot soldier and definitely close out my pending. Okay? Because theoretically, if that's the correct shift, it should start dropping from here, not come and trap the EMA. All right? I'm expecting continuous red candles, not a trap. Once they trap, it's over. Okay? All right. That's why very seldom you see me post a peak trade like this. I don't really trade these because I've been burnt so many times with these peak trades that it's just not worth it for me to trade. I don't know why I need to get a new mouse. This is just crazy. Whenever I click the middle part of the mouse, the little the rolly, it starts jumping around like that for no reason. Okay. All right. So Patricia's saying, well, what about low spreads? We got only crappy spreads because we got forex.com and Rwanda. Yeah. Well, I use Trader's Way. Okay, and there are a couple of other foreign brokers that will accept U.S. clients. They kind of have lower spreads. Okay. All right. Steven is saying the 50 is a bungee cord for price, so price likes to go back to the medium, right? Okay, Lisa saying, could you please explain EU again? I tried to short it earlier in New York. Price in the midline of the Asian 13 EMA, low EMA, but above the 200 EMA. Why is not a valid entry? You try to yeah, well, I mean, you're on a peak formation high, so yeah, you will be looking for reason to go short. But remember, for me, the short, see, I'm not even doing anything, and this thing is just jumping around like crazy. For me, going short is right here at the blue tracer, right? I don't have any shorts else anywhere in here. There's no short for me. Short is what? 12, 21, 22s. Okay, if you're taking an ID move, all right, the only ID move I see is right in here, going short. So let us take a look. Okay, so if I'm looking for shorts, the only shorts in here, okay, is in here, like an ID safety kind of a deal. All right, so I would take a short in here like that, right? That'll be my move. That is it, right? Comes back close above the 13, I kill it. The next move I take is over here if I'm going to take this bounce trade again. Okay, goes down, 8, 9 pips, close above the 13, I kill it. That's it. -1, -2. That is it. I don't go short over here because there's no pattern. Yeah, I hit the stop, but there's no pattern in here. Okay, so you have to have a set before you take the trade. You just can't short it. Okay, you're up 20 pips on EA. Nice, very nice, very nice. Yeah, that's a mover. Okay, so we did EC, EA. You up 20 pips. You took that move off that high. Yeah, the EA moves. They're one of those pairs. EA, GA, EN, GN. They got bigger ADRs and they move. Okay, so I'm at the peak formation high. We're looking for a reason to go short. There's the harmonic up there, right? All right, so close below 13, back above. This one didn't close, right? This one did. So your entry has to be over here going short, right? Again, if you're trading against the 5200 cross, your first target is water, second target is Mayo. What do I mean by against the 5200 cross? The 5200 is pointing upwards. I'm going short into it. So my first target is water, my second target is Mayo. Okay? That's it. Once you take this move, if that's what you're trading, based on the harmonic, blue tracer is there. So for me, this is nothing. But if you guys are trading up these highs, that's why I don't recommend it. Is you're going to get chopped up into bits. The next one is over here, and then you're going to get over here, and then it's too complicated for me. Okay. EN. All right. So I'm also sitting at the peak formation high. I think we talked about this earlier with the harmonics. All right. Close below 13, back above, back below. So this is my high. First leg, there's more than 3 candles above it. So that is no longer first leg, but if you notice, out of the band, in the band, and then this piece is the baseline bounce, right? Market baseline. RS line goes below the market baseline and it traps up a bit. Okay. Now, if you took the trade here, that's an aggressive move, right? If you try to make it more like a half a bat move, that'll also work. But the better entry is wait for the 1350 cross and take it from here. RSI line, signal line cross right there, and just take the ID short. That's your better move. All the way down. Stayed below the 13, right? That's your better move. Okay. GU. Okay, so GU, we were at the peak formation high. I was looking for a reason to go short. Notice the quarter point, the two railroad tracks up there, the blue tracer right there. So let's take a look at the 15-minute chart. Now, of course, it moved with the GBP news, right? So some of you guys couldn't take it because it literally half a bat is right here, railroad track, second leg, and then right after that, the news. Okay, so that's a non-starter. Okay. GJ. Okay, so GJ, I had it at level 2 long. So level 1, and then this was level 2, heading up to the long side. Okay, so we were right there. I was like, man, you know what? It could be a W off the mail. You could have taken it off as a W off the mail, provided this one touched it, which not really. So I wasn't too thrilled with this trade long. Okay, okay, so it's kind of like almost like a little half a bat here, and then it just kind of just ugly. All right, it did hit the stop to the blue tracer, half a bat again, right when the news happened. So that's the pass. Okay. The good news is, however, you got a nice 1350 cross. You're looking for this to come back up. Some of you guys will be able to take, if there's a harmonic here, one leg out of the band, one leg in the band, as an advanced W, hitting back up like that. Okay. But yeah, most of the pound pairs moved with news, so I don't think there'll be any way for you to take this trade short. Okay, we have the right directional bias. Same thing over here. See? Boom, 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 boom. Beautiful like a half a bat. You can't take it. That's news. I mean, it's nice. It looks beautiful. Okay? I mean, how often do we get second leg railroad tracks? I mean, come on. Right? Can't take it. Pound Aussie, same thing. Right? GA, beautiful harmonic up here. Can't touch it. GN. Close below 13, back above, back below. And then, well, this one, let's see if that was your first leg. Close below 13, back above, close below 13. No more than 4 candles above the first leg. RS line below, signal line below the market baseline, lights out. Well, you could have probably grabbed a nice 20, 25 pips if that's the one you took from here. Right? For me, it's a pass why the blue tracer is here, and I'm looking for 12, 21, 22s, which does not qualify as such. So that is not my set. Okay? So I'm looking for a bounce trade, safety or 1 hour 50-50 bounce. GF also will move. As you can see, will also move with the news. All right, blue tracer. This is, I mean, you know, this is, you can't get any better than this, man. Right at the blue tracer, it comes right to the blue tracer, NM. Second leg railroad tracks, news. Done. Okay. The question is, can you take this trade after the news candle? The answer is you can. The problem is your stop, regardless of where you put it, is going to be too big. Okay, because it's rate news and monetary policy and all that stuff. So it's okay. Close at the extreme of structure. I'm looking for a safety tomorrow or a 1 hour 50-50 bounce. Okay, so hopefully they'll give that to us in London. We'll beat the crap out of them, and then we'll be done before non-farm. Aussie dollar. So Aussie dollar, right? We were right here where we were looking for M&W of the Mayo. Okay, so M&W of the Mayo. Okay, so all right, so it starts coming back up. It hits the Mayo here, first leg, comes back, hits the second leg, and then it still hasn't dropped yet. So nothing. See, that's why level 2, I don't like to take a counter move. Okay, you would think this is the counter, comes back. You think this is the counter, it comes back. Then you take this to the counter, and finally it works. But you already got scratched out like 3 times. By the time you take this one, it's only worth it for you to, you know, it'll just give you what you lost. I mean, you're just going to be break even. So that's only like 12, 13 pips. It's not like a 20 pip move, right? So you take a scratch over there, and then you take it again over here, 12, 13 pips. So it's not even worth it. You see what I'm saying? The counter moves are not worth it. Okay, so we're waiting for this to roll and then drop. Okay, and all right, most of these moves happened last night. Okay, they came in, they bounced, 50-50 bounce. You measure the distance from here to here, it's got to be 2. Okay, 1 hour is 2, 15 minutes is 1.5, so it's 1.8. Okay, from the static. It can be short, but no more than 2. It can trap. So for example, if I'm looking for a short or long, for example, right? So they like this, for example, right? So I'm looking for a 50-50 bounce. This one is the trap, so it goes in below it, comes back above. That's okay. All right. This one, it misses it. That's okay too, but it cannot be more than 2. The distance from the high of the RSI to the static cannot be 2. All right, so that's the move. So that means I'm in level 2. Ideally, I'm looking for what? With a 50-200 cross, I'm off the Mayo to the downside. All right. So we're not going to talk about the counter move because it's going to be ugly. Dollar Swiss. Dollar Swiss, it was kind of, could be a potential reset level 1 long or a level 1 short. It's just a little messy. We're talking about maybe potentially leaving this one alone, just like Euro Pound. Okay, it's a little messy. All right, if you're looking for longs, for example, let's see what happens in the longs. If I'm looking for longs, right, W of the Mayo, here's my W. All right, so your entry would have to be here. When they bust through, RSI is above the signal line, above the market baseline. You got one leg out of the band, one leg in the band, long. Right, 8, 9 pips. It closes below, you kill it. Okay, that's -4. Now this area becomes the apex. Like this area becomes where volume is trapped. So that means price has to break above it before you go long, which is here. All right, if that is the case, then you have to take this trade on the 1/3 pullback, and your target has to be here. The blue tracer, 14 pips. All right, so -4 plus 14 plus 10. So you walked away at +10. All right, always figure out, hey, if I took a scratch here and this was my highest point before it came back and closed below 13, price has to break above there and close before you take it. Okay, so you still walked away positive, but this is just a little messy for me. All right, dollar CAD. Okay, so we're in level 2. What we're looking for, stop and low rise. All right, so this is just a counter move, so there's nothing there yet. All right, with a 50-200 cross, you got one leg. You may get a second leg in here, the long side. Dollar yen. Okay, so dollar yen we had in level 2. We're looking for reason to go short. All right, short's a better trade. All right, let's see. So as you can see, this is just, I don't know, there's nothing there. It's not like a pattern. There's no set. There's nothing. It's just dribble, 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 and just straight drop. So there's no set. Okay, that's the pass. Okay, I'm looking for short. It did drop, but no set. Finally, Euro Pound. We had it in level 1. We're looking for reason to go long, but I said, well, it could be a big level 3 here and all that stuff. So that was a pass. Some of you guys were like, oh my God, look at the pattern. It's true. Beautiful pattern. Okay. Beautiful pattern. Boom. Close above 13, back below, back above, shift. Out of the band, in the band, long, right? Insane. 50 pips. You got 50 going long, but that's just still insane. Okay. to me, it was not worth it. It was a pass for me all day. All right. I think some of you guys, which pair was it? Not this one. FJ. Yeah. So some of you guys were trading FJ. Okay. I mean, this is what you call gold standard trade, right? You see the 5200 cross, 5200 cross, M of the Mayo, right? Close below 13, back above, back below. And obviously, there's no more than 4 candles above the first leg. This is too tight, so you literally wait for that to close below and you short it. RSI line below, signal line below the market baseline. Classic. M of the Mayo. You cannot miss this trade. This is like the gold standard of trading. Okay? All right? If you miss this move, your next move is an ID move, which never happened. It's a straightaway. This going sideways, they dropped. All right. And I think, there were some like other moves and stuff like that, but some long, some short. But some of these other pairs have very low ADR, so you have to be careful when you trade these pairs. Okay. All right. Let's see any other questions. Would you recommend get rid of the 5 EMAs? Yeah. If you notice, I don't have the 5 EMA on my 50. It's just too many lines, so I just get rid of the 5 EMA. In that level 2 in GJ, because of the 3 times ADR. It was level 2, absolutely correct. From here to here was level 2, right? 255, 250 is 2 times ADR. So yeah, I mean this drop probably is. So it could be level 2. I just put it over there like that because of the first drop, but it could be level. I didn't measure it. I would do that in London, but that's level 2, 5200 cross, right? Level 2. I agree, Stephen. Yes, knowing out of the band in the band is wonderful confirmation. Yes. Hey Jose, how you doing, bud? Can you show UJ? Sure. All right, so I'm coming off of this move from here to here is approximately 222. So I should be in level 3. You know what? These things, I don't know why it keeps changing. It disappeared and I did it again and then it popped up and then it did something else. It's just crazy. It was like this. I think I may have had that in the London when I did the session in London. Yeah, this is level 3. 3 times ADR. Yep. That's why I took this bounce over here. Yesterday in Asia, I took this as a 1 hour 50-50 bounce long, right? 20 pips. Any other questions? Yeah, stuff goes missing. I don't know why I keep doing that. I thought I saved it too. Anyway, let's do our presentation then, right? Let's talk about the famous TDI. Okay, TDI, Traders Dynamic Index. You ready? Okay. Okay, so why use the TDI? All right, the key piece of the TDI is the RSI line, the black line, okay, which is based on closed candles. All right, make sure you refresh before taking a trade. Remember, the RSI is based on, remember this, like 21, or some people use 18, some people use 13, whatever the number you use for the RSI line. Understand that it's an average of that many number of candle closes. Okay, so if you have a 21 RSI, that means it's going to average the close of the last 21 candles. So as it moves along, the averages will change, but you have to refresh it for it to recalculate it correctly and move the line correctly. So before you take a trade, refresh your charts, okay? Multiple time frame RSI lines are used in TDI, allowing us to view multiple trends at the same time. Okay, so the market baseline, the MBL, the yellow line, all right, on the 15 minutes is the 4-hour RSI line. Okay, that's what, what's his name? The guy from Compass FX. I'm drawing a blank right now. Dean Malone, right? You got that right on top of it. Dean Malone, right? We were in the class in Dallas. I remember very specifically, and he goes, "You know the market baseline, the yellow line is the 4-hour RSI line, right?" And I'm like, "Great." So I wrote it down, and so anyway, that's why the market baseline kind of goes up and down, up and down, up and down, in line. So we can use that as like almost trend, okay? Because the RSI line of the high time frame. So the market baseline reaching overbought, oversold levels allows us to gauge when a reversal might happen. Okay? The market baseline does not usually go overbought or oversold. Okay, it'll get close to overbought, RSI line will be overbought, but you don't normally see the market baseline being overbought. Okay, so that's a very telltale sign that a reversal is imminent. Okay, and the volatility band, those little Bollinger Band looking things, right, tells us where the volume is in the market. Okay. All right. So just a quick snapshot, right? This is what it means. The market baseline is the yellow line. The red line, the signal line. The green line or the black line is the RSI line. All right. So when we're looking for shorts, the correct TDI confirmation, is RSI line is below the signal line, below the market baseline. That's the correct confirmation. It has to be in that direction. Okay, because they're called lined up. It's lined up correctly. Same thing. It's going long. The RSI line is above the signal line, the red line above the market baseline. Okay, notice the angle of separation, right? If the RSI line signal line has a nice angle of separation, that thing has got a lot of strength to the downside. Okay, if it's very tight like this, doesn't necessarily mean that it has a lot of has a lot of strength or momentum to the downside. Okay, but if it's got a nice angle of separation between RSI line and signal line, that means it is. Okay, all right. So again, these are old Steve's charts. That's why they're black in the background. All right. As you can see, this is a beautiful 1, 2, 3 to the low. W of the Mayo, right? Mayo, W of the Mayo long. Boom, right there or there. Okay. This is an older version where its charts were black. And then the newer version, the one that you recognize now, is the gray background, right? Same thing. Blue tracers right here. Almost have a shoulder, head, shoulder. There's more than 4 candles above it. But 1, 2, 3, 4, 5. So you have to amputate the left shoulder, take the right shoulder, and you go short. All right, notice the TDI. Okay. It's still the same thing, right? 1350 cross, first pullback, 50-50 bounce short. There's 70 pips here, easily got 20 pips in this move. All right. So compare the M of the blue tracer. Here's the blue tracer, right? Here's the M of the blue tracer with the M on TDI. Notice there's divergence, right? Also notice the keyword out of the band, in the band with divergence. This is coming down, this is going up. All right. Ideally your entry is here, but because it's so tight to the EMA, you wait until it breaks. A nice shift candle, and then off to the races. Okay? Because I don't know if this is going to come back and give me what? A 3 drives pattern, which is the worst case, where it'll come like this, right? It's going to do one of these numbers. Boom, close below 13, close below 13, higher. And it's going to look like this. And this is going to look like this. Lower. Okay, you don't know that. That's why you don't want to anticipate this move here. I never anticipate it. I trade my set based on what I see. That's it. I don't be like, okay, great, I'm going to short here, but you know what? Just in case it drops, I mean, well, why don't you just take it here and put your stop here? The same thing. Then I don't have to sit through 1, 2, 3, 4, 5 on the 6 candle, hour and a half before it shifts. I take it in 2 candles, I'm done. Okay? So now see how the half a bat also makes a 1-1 on TDI. 1-1 means one leg out of the band, one leg in the band. So instead of saying one leg out of the band, one leg in the band, we just say 1-1. Okay? Comes down. This is also a Mayo move. Close above the 13, back below. So instead of taking the trade right before the Mayo and things, you just literally wait for them to punch through all the EMAs. RSI above the signal line, above the market baseline, and you go long from here. All right? So remember a while back, Steve made us do something called a TDI only drill, right? So all you're looking for is, hey, I'm looking for an M&W. So some of you will say, that looks good. I'm going to take the trade short here, and here looks good. I'm going to take the trade long here, right? So you would sometimes say, hey, short here, long here. Okay? Well, let's see if that is what it is. Okay? On the next one, you see how you got fooled based on the levels. That's why the levels are vital. Okay, so here you're like, well, there's not really any pattern. Yes, it worked because the entry would have been over here, right? Close below 13 short. But I'm in level 1 long, so I don't really want to take the short. Okay, I don't really want to take the short. But your better move is to the long side. Out of the band, in the band, but you can't touch it until RSI is above the signal line, above the market baseline, and price closed above the 13. So even though this one closed above the signal line, RSI not above the market baseline. That's why that will prevent you, by focusing on the TDI, that will prevent you from taking a trade that will not work. Anytime you take an M&W pattern, RSI has to be above the market baseline, period. If you're taking a bounce trade, like an ID move, which this is, right, 1350 cross first pullback ID move, you take it here, it goes above, it comes back below and closes below 13, you kill it. Notice it just literally zero. Nothing happened. You cannot take this trade here. The RSI line, the black line, has to be above the market baseline when you can take it. Okay, so just following these little TDI rules is going to prevent you from taking unnecessary scratches, or worse, in this case, a stop out. Okay, so here's another example. That's why I did that example. Here's another example of TDI only drill, right? So same thing here. You see out of the band, in the band, right? Perfect. This one happens to be the in the band, happens to be a baseline bounce, right? So short, and then this is out of the band, in the band, long. Why not? Okay, let's take a look. See, not the cleanest, but I mean, it does work, right? Right, out of the band, in the band, you go short here. RSI is below the signal line, below the market baseline, so you go short literally right there. Okay, 48 pips. What's the big deal? Goes down, come back above the 13, you take a scratch. Nothing. All right. But if I'm looking for longs, which I can see, right? I'm looking for longs. Here's my next level up here. Here's the W of the blueberry. 1, boom, 2 to the low. Close above 13, back below, back above. Now, that if there's enough distance from here to the water, that's when you take it. Put your stop right below here, 3 to 5 pips below. Notice the one leg out of the band, one leg in the band. So in the New Jersey meetup, right, this was the presentation I did. One leg out of the band, one leg in the band. If you just purely follow that on an anchor formation, doesn't matter what time frame, 15 minutes, 5 minutes, whatever, you will be more successful than if you don't follow this little rule of thumb. Okay? The reason it goes outside the band, like Steve tells us, is because this is the vector. This is the outside structure that the market makers create. And this is where they trap the volume. Then this is the consolidation inducing longs and inducing shorts. Okay, inducing shorts on the lower time frame, inducing longs on the lower time frame. Okay. All right. So It's kind of cool where they do this little shark fin blood in the water, pulls it back, then drops it and gives you a second leg to the upside. All right. So now put the W pattern and the TDI together. So in this example, boom, close above, back below. Notice 1, 2, 3. The fourth candle comes back inside here. So this is a valid W formation. Notice there is no divergence. That's why I didn't draw the line. This is still a little bit lower than that, right? But notice this area closed above the 13. Think of the 13 EMA as the signal line. So this one also closed above the signal line. Notice the one leg out of the band, one leg in the band, and your best entries are RSI line above the signal line above the market baseline. Followed by what? 1350 cross. Wait for the RSI signal line cross, wherever that is, here, and then you go. Okay, that's your ID move. All right. I know some of you guys don't even look at TDI, but use TDI as confirmation. It helps, especially on the M and W formations. Okay. Same thing here. Putting the M pattern and the TDI together. 200 EMA. They hit it. They come out of the box. Here's my first hit. 1. This is the same. 1, 2, 3 to the high. Close below 13. Back above. Back below. Same thing. Always wait for the outside the band. Close below 13. Close below the catch-up. Back above. Back below. Back above. Back below. You could take it there if there's enough pips. If not, you wait for them to close below and you take it. As long as RSI is below, signal line below the market angle of separation. You miss this, no big deal. You wait for the ID move. All right. Confirming safety with TDI makes for a stronger setup. Always use confirmation. That's why I always say confirmed pattern, confirmed setup. Confirm, the confirmation comes from the TDI. All right. There will be unconfirmed setups. For example, here, this is an unconfirmed advanced M, right? Out of the band, in the band, but if you take it over here, let's presume RSI line does not cross, like right there, it did not cross. It only crossed after this big shift below the market baseline. So this entry here, if RSI line is not below the market baseline, is considered an unconfirmed advanced M. Riskier, right? Why? Because this could come back railroad tracks and do a real M, and then now you're like, oh, I shouldn't have taken it, right? Okay. Same thing. Safety, out of the band, in the band. Entry is always RSI line above the signal line, above the market baseline on any M or W or half a bat, head and shoulders pattern. Only time you need RSI line signal line cross is on a bounce trade. The ID 50 or AR 50 or the AR 00, which we will cover later on. Those are setups. Those are beautiful, amazing setups. We're going to cover it later on in the DMR in the year. Okay? I'm trying to get through all the little nuances first, and then when we hit the setups, hopefully by then there would be no questions about, well, where should I put my stop? When can I take my trade? What do you mean by confirmed setup? That should all have been answered. You're just looking at the setups and you're just trading. Okay? So the key piece is RSI line above the signal line, above the market baseline is the TDI confirmation. So this example, 200 EMA is there. W of the male. Yeah, they'll sometimes go below it. Why? Because people, they want you to go short right here. That's where they want you to go short. They're like, oh, well, that's my first pullback, 50-50 bounce, I'm going to go short. Sorry, my ID 50. All right, using the levels, 50-200 is pointing up. I'm looking for longs. Wait for it to clear all the EMAs long, right? In this example, RSI line is above the signal line, above the market baseline. Boom, above all the EMAs, straight up. Wait for these setups, man. Wait for the perfect setup with the one leg out of the band, one leg in the band, the whole, everything I'm just showing you. All right. People do send me trades that they take that does not look like this. They look like dribble stuff. They look like this, and they're like, okay, I went short. Well, why didn't it work? I'm like, I don't see anything. Well, I see an M. I said, well, I guess it didn't work because it was not clean. Okay. Here's another example: a 12 trade setup with TDI confirmation. One leg, perfect. Blue tracer, perfect. Close below 13, back above, back below. RSI line below the signal line, below the market baseline. This one did close. It's very close, but it never really crossed. The next candle just straight back up. Beautiful close, short. If that's not enough pips, next entry is here. Okay? All right? A set of criteria, a set of rules for you to trade it, so it's not very arbitrary. It's not like we call it MSU, right? Making stuff up. Okay? The baseline bounce, or BLB, this is a verbiage from our good friend Doug, right? Or the third leg is a good confirmation. So for example, here is an M of the Mayo, right? So for example, you said, hey, that's my M of the Mayo. RSI line did go below the signal line, below the market baseline. I did have a one leg out of the band, one leg in the band. That's perfect. I'm going to take it. You drop the fib, 1/3 pullback, you take it. Boom, it traps, right? It closes back above not 13, but above the water. That's the trap. I'm out. Marginal. 4 5 pips. This 48 pips. Let's say 5 pips, 6 pips. No big deal. I'm not going to short it right here. That's a hammer. Never close below the water. Okay? They come back. They hit the stop, 430, the news. And then they roll over and just shift it. Look at this beautiful shift candle. No wicks. Okay? We'll cover shifts sooner than later. Okay? And then off to the races. Then what happened? 1350 cross, first pullback, 50-50 bounce. The key piece is you measure it. You're like, that's a little more than 1.5. I'm not. This looks good. 1.5 qualifies. RSI line below signal line, below the market baseline. I'm going to go short here. This is 90 pips, easy. 30, 20, whatever you're going for. All right. This little piece, second or third leg in this example, the third leg happens to be a baseline bounce. Okay. Price closes below the 13. RSI line below the signal line, below the market baseline. Nice little angle of separation. I'm going to short it. Why not? And then I'm going to beat them up over here again. Okay? Don't be like, hey, touch the 50. I'm going to short. If this doesn't qualify, it's not going to work, man. I'm telling you, it's not going to work. All right? And if you did take this trade, please close it right here and close above the 13. Take your little minus 3-4 pip scratch and just be done. All right? Then you just literally wait for the RSI line to confirm. Then you take. Okay? Here's a 1 hour TDI confirmation on an M pattern. Same thing. Blue traces up here. First leg. Close below 13. Back above. Right to the blue tracer. It messes around. Close below 13 short. Out of the band. In the band. That's what I'm trying to get through to you. Out of the band, in the band. RSI line below signal line, below the market baseline. Nice angle of separation. Price close below the 13. If you take the trade and if it doesn't look right, or price close back above the 13, you kill it. And then you wait for your next move. Sometimes it'll be a baseline bounce. Okay, if the second leg is a baseline bounce means it goes below the market baseline, then back above, then back below. If you look at the previous ones, right, it's out of the band, in the band before it goes below the market baseline. That's usually a typical M structure. For example, here, out of the band, in the band, usually they'll happen before it goes below the market baseline. Once it goes below the market baseline, then you're looking for a baseline bounce or a baseline trap. In this example, this is out of the band, this is in the band, right? But this is a baseline trap. So the RSI line goes below the market baseline, then it traps it. Those are nicer when, especially if you notice the divergence. Okay, and they hit the stop. These are lights out, man. These are really nice setups on the 1 hour chart. Okay, just exactly like this. The second leg of the pattern is the baseline bounce. That means the RSI line goes below the baseline, comes back, traps it, or bounces off of it. And ideally, the market baseline, the yellow line, is tilting to the downside. Okay? Here's another example of a 1 hour 50-50 bounce. All right, comes off this anchor. I don't trade them. Looks ugly to me. Okay, I wait for the 1350 cross and I wait for the long. All right. So for example, then what I do is, let's presume that this one did close above, right? I'm going to measure the distance from here to here. If it's 2 pips, 2 points or more, then it's a pass. If it's 2 points or less, I'm going to look to engage this long here. All right. Depending on how much it went, I'll take my scratch. This is nice. Railroad tracks. A clean move to the upside, RSI signal line cross. By the time they flip from this candle to this candle, you go long. Okay, so on the bounce trade, all I need is a RSI signal line cross. On a W pattern, RSI signal line cross above the market baseline. But most of the time, if you're taking a bounce trade, the RSI will be or should be above the market baseline. Not always, though. Okay. All right. So here's the deal. If it doesn't challenge you, it won't change you. Okay. Trading is a challenge. It's not easy. It does take time. It does take effort. It does take work. Okay. You sit in front of the charts at night, nothing happens, like last couple of days. You're annoyed. You're like, man, I'd rather be sleeping than looking at this. Right? And then things happen in Asia, and then you have a couple of people and car posting stuff at night, and you're like, oh, look at this. These guys are posting this stuff. It's in the evening. What the hell? Well, believe it or not, I got lucky. I normally don't even look at the chart at that time. I just happened to be working on this last night. That's why I saw it. Otherwise, I would have not seen it. Okay? Now, people in Australia, like Anne and Clive and a couple of those guys, they saw it. They were awake. They were watching it. They're like, wow, look at this stuff. All right? They took those trades. Okay? So it's a challenge. It's not easy. All right? So all the challenges that you have to overcome, patience, discipline, and stuff, it'll change you. You become more disciplined. You become more patient. Okay? We're here to make sure that you succeed. Follow the rules. Do the homework. And you will do well. All right? Let's see any questions you guys have. Thanks, Patricia. Interactive brokers. Yes, I've heard of interactive brokers, David. Nice to see you, bud. Would you recommend to look at number of pairs? Yeah, so normally just for newbies, new students, euro and pound and all the crosses. So euro and pound crosses, okay? Lisa is saying, how about advanced TDI? We've already covered advanced M's and W's and stuff. It's the same thing. I was just trying to purely point out the power of the TDI, because I've noticed that people haven't been using the TDI as much as they should be. All right. Thanks, David. George, yes, buddy. Good to see you. Yes, Stephen. Peak first in level 3, then the intraday, right? ID, and then the 50-50 bounce, 1 hour or the safety. We'll cover that. Yes, you can do dollar Swiss, UF. Yeah, all the majors. You can do all the majors. Dollar yen, dollar Swiss, dollar CAD. Okay, Aussie and New Zealand, right? If you want to. But if you just want to keep it rather light and small, then just go with the euro and pound crosses. Yep. Dino, yes. Dino created the TDI. That is absolutely correct. All right. We'll talk more about that, Lisa.